Good afternoon. Thank you for joining us in this ITLIVE session. My name is Manuel Garcia. I'm the Operations Manager for Global Links. And today we have a very special guest who's Bill Genovese. Bill Genovese is going to walk us through a presentation about the next generation of digital financial services. We know that digital transformation has been changing the way in which businesses do business, and definitely the financial industry has been one of the ones that has been mostly transformed by digital services. And now that everything is changing with artificial intelligence, machine learning, and a lot of technologies that are coming for the future, digital services are going to be impacted for this. So Bill is going to walk us through this. Bill is a respected CIO and CTO. He has been working with national companies across 4 different companies. Very experienced guy. Very happy to have you here, Bill. Thank you for joining us for this session.
Thank you for having me and everybody at Global Links, and very much looking forward to this. Jump right in. I'd like to start by saying, we're focusing on, in terms of a forecast or vision or view, and I've lived and worked all over the world for a lot of companies with banks, investment banks, insurers, diversified financial services, e-commerce clients, and really the context or scope of this presentation and discussions around really seeing as far as we can see in terms of next generation. So that's really our children that are growing up now. Okay. And because it's real hard with everything going on in the world and the unknown black swans and events like COVID, how things are going to change. So thank you again for the introduction. A little bit more about me. I've in the past 3 to 4 years have focused more on what's coming next in terms of nascent technologies centered on artificial intelligence, machine learning, blockchain. I was a CIO and CTO for a blockchain company. I've joined another company now as a co-founder and CTO focused in that area. Mobile digital, quantum computing, drones, and IoT. And really, I'd like to kind of say that the business model around financial services, as many of us are realizing, is not owned by the traditional industry anymore. It's blurring. It's coming into e-commerce, telecom, healthcare. So it's becoming further embedded or ubiquitous and invisible. And that's what I've seen throughout my career. My career has really spanned, 3 or 4 key companies. Huawei Technologies, where I led corporate strategy for the global banking and financial market sector. I mentioned the blockchain company. Most of my career before that was with IBM and KPMG for nearly 20 years. And I came into those from Wachovia Bank, which is now Wells Fargo. So a number of roles in both the business and architecture engineering side and CIO and CTO. So the first thing I'd kind of like to start you with is that if you kind of look at financial services in a microcosm, or focused on some of the areas and functions in that industry, this is what this chart is showing. It's mapping functions that are done in the finance area. And a lot of these can be, translated into other industries. So a lot of these functions are needed in e-commerce or manufacturing or telco. Okay, but the point here is this is a mapping of some of these functions to where solutions have started to become developed. Okay, and a lot of these solution or technology areas are emerging. Blockchain, I mentioned earlier, advanced analytics, machine learning. But your first observation is these are not mutually exclusive or mutually independent. You're seeing overlap here. So that's the first backdrop that I really want to, emphasize in this discussion is the whole theme around technology convergence in this space. And that's what's driving financial services becoming more embedded or invisible across industry vectors, okay? Because you're seeing blockchain, smart contracts, AI, IoT, they're kind of merging together to accelerate and solve next generation digital service problems that have existed with legacy technology in the past, okay? And all of these are enabling faster and more efficient digital transformation, not only in the financial services industry itself, but across industry verticals as it becomes invisible. If you look at banking and how it's evolved, in many cases, we've kind of gone almost a little bit the future is back to the past. And what I mean by that, if you look at informal banking, okay, so digital currency, Bitcoin, Ethereum, okay, these are nascent currency trading systems that are an alternative to traditional fiat currency that we all know and love and have grown up with. So you're kind of seeing, that as a new entry point that's fueling, okay, more banking as a lifestyle, okay, from banking as a product or financial services as an individual product. So we're already past individual products and going into a branch, okay, for simple banking relationships to having how you consume financial services, whether it's a payment, credit lending, or even deposits. You can do mobile banking deposits now, okay, across omni channels, so multiple channel access points. That could be your internet browser, it could be an ATM, it could be your mobile device or phone, or even your smartwatch. Okay, and what's kind of fueled that a bit is open banking, APIs, microservices, and integration. Now we're moving into what I call, and you may have heard others mention this too, multi-channel financial services or ubiquitous banking, and banking and financial services being further developed as a utility that's embedded. So, when you shop on Amazon, okay, all the way through product fulfillment and delivery in Shopify or any of these other fulfillment applications, Shipped is another example. There's integration to PayPal. There's integration to Apple Pay. Okay, so it's no longer that you're having to go to your bank, okay, to make the payment or even look at your balance. Okay, it's ubiquitous. It's embedded from the edge all the way through, okay, when you get that product. So it becomes embedded and further ambient across a number of industry verticals. And we're already experiencing that now. And you're going to see further examples of that in the next generation. Okay, and not only from you interacting with your smartphone, your Apple or your Samsung or your Huawei or others, but through voice as well. Okay, and other access points and interfaces could be on your refrigerator, your bathroom mirror, so on and so forth. So the evolution of financial services is going to keep changing and become further embedded. And when we talk about digital financial services, what are we really talking about? Well, if you kind of break this down in terms of, you may be familiar with Maslow's hierarchy of needs, which is a pyramid. We need to eat, we need to sleep, we need to live to survive, the basic needs to survive and thrive. Well, in terms of financial services, we'll really need it in those three areas anyway. And we need to have payments. So we need to pay for our stuff. Okay, we need to pay for goods and services, and we need to do it quickly, on demand, 24/7. So COVID has reinforced and fueled this expectation from the payments perspective from the mobile device. Okay, we cannot, go write out a check and send it out in the mail and expect to get a good or service. It needs to be on demand. We need to send money to loved ones, okay, friends and family, digital remittances. If we don't have enough money to pay for stuff, we need to borrow quickly. We can't jump in our car, go down to the bank branch and wait 5 to 7 days to get a loan approved, and we may not even need a lot of money. Okay, so microfinancing without human interaction. So from the mobile device, digital lending. And the last bastion, other than payments and credit and lending for the most part, or transfers, is financial asset protection. Okay, so this would be insurance, wealth management, and deposits. So if you kind of look at it at this point where we're doing better, the economy's coming back, we need to store our money and protect it. Well, once again, we don't want to take a wheelbarrow and gold bullion and drive down to the bank and make a big deposit. We want to do things digitally, okay, including deposits, and ideally from multiple channels or platforms. So this is probably the last area where the big tech or e-commerce giants are starting to disrupt the industry, but they are. So Google is moving into deposits. And then InsurTech, you're seeing banks offer insurance products Amazon. You buy stuff on Amazon. It's insured through protection plans. So you're seeing a lot of different entry points for digital financial services other than payments and credit and lending now. Robinhood, Acorns, and Stash are all examples of next generation what's coming for investing. So you don't need to have a broker relationship. You don't need to phone up your broker, make an appointment to make a trade, or go to a traditional brokerage house and pay a commission. You can do that through Robinhood and some of these other mobile and internet applications for wealth management. What's fueling this, once again, thinking again in the power of three, it's always, looking at it simplistically, but not necessarily overly simplistically, is really three forces. So the sharing economy and our changing expectations. And, this started with ride sharing, food delivery. Okay. And I read a statistical chart that said, in most countries, people are using some type of sharing in terms of platform, whether it's ride share, food delivery, 5 to 7 times per day. Okay. That's quite a bit. And then that's a bit surprising. But, when you think of what we went through in terms of the pandemic and are going through still, you can see that's definitely probably going to only increase. Now, what that is fueled is business model evolution. Okay. So what that, can be translated into saying is industries are traditionally not staying in their own lane anymore. Okay. So you have e-commerce moving into financial services. Okay. And you're going to see more and more examples of vagueness, fuzziness, and cloudiness of what industry you're actually working with to solve your needs. But as consumers, do we really care? Okay. As long as we have 24/7 services met for ourselves and they're secure, safe, and they're private when needed. And then this goes back to what's enabling or delivering that, which I'll go into a bit more in this presentation, is technology. Okay. And it's not one technology. Once again, it's going to be a convergence of blockchain, AI, IoT, quantum computing coming up, and picking up off of big data and analytics in recent years. So if you kind of look at some of the disruptors on a larger scale in the traditional industry, and then fintechs. Now, the term fintech it's been tossed around, and it means different things to different people in different geographies. But the way that I kind of look at this is fintechs are marginally or from a functional basis trying to move into the space, not as holistically perhaps as some of the big tech giants on the left of the chart. So fintechs may be focusing on a certain aspect of meeting consumer demand and needs. Okay, loans and mortgages, wealth management. I mentioned Robinhood, eToro is another one. Okay, investment and trading, payments. The best example, okay, of a fintech, okay, that's global in nature is PayPal. Okay, they disrupted and took over payments. But now they're moving into digital currency. They're moving into other areas. They're offering credit and lending. Okay. They see what you're spending your money on. And now PayPal, I've been with them for 10 years. They offer me 2 to 4% cash back in terms of a credit line. Okay. They do things that my traditional bank, who I've been with a lot longer, don't do. Okay. In terms of customer analytic information on myself. Okay. So they're starting to expand into other areas other than just payments. And then you have wealth management, remittance, and foreign exchange. The non-bank entrants have kind of started with e-commerce or social media. And through the mobile channel, the top of the house of the bank, they've come in and they're starting to move into more of multi-channel distribution to get into some of the core systems. Okay. And they're doing that through digital platforms and data and analytics, customer analytics, business intelligence, and insights, to get into that middle layer. But once again, that middle layer where you see applied banking platform is really financial asset protection, deposits, to some degree wealth management. But that's starting to be picked apart a little bit by the fintechs on the right. Okay, so there's really the differences there. So both of them have kind of come in through the front end digital channel, starting with the internet, but now even more so with mobile apps. Okay. And then they're branching down further and further into the traditional industry in terms of where they may or may not play. And what influences that too is regulation. Okay. In terms of process. So anti-money laundering, know your customer. And that varies widely, as many of us know, on a country and region by region basis. Breaking this down into a little bit of a different view, this comes from PwC, okay? And you can kind of look at this in terms of a ecosystem. So this goes back to my point how financial services is becoming more ubiquitous. It's not owned by the traditional banks anymore or providers, okay? And this looks at it from a layered enterprise architecture view from the network perspective, okay? And really money transfer when I contextually speak about networks. So SWIFT is the oldest and biggest provider of money transfer between banks in the market economy, and then even protecting consumers. Okay, if any of you've transferred money from your bank in the U.S. to international banks, you need a SWIFT code or an IBAN code. Okay, but then there's disruptors there with Ripple. Okay, and digital assets and things of that nature. And then, you're starting to see some of the disruption in terms of core systems moving outward, okay, in that concentric circle there. And then really where it starts to open up in terms of digital transformation, okay, is APIs, okay? So what types of business model, okay? Is the bank providing APIs to e-commerce players or smaller fintechs to expand into other adjacent industries? Are they integrating APIs? Are they aggregating APIs? So that's where the core transformation is really beginning, 3 to 5, okay, to connect the traditional market economy with the consumer economy. And then around the outside, you're starting to see where the fintechs, which was on the previous chart, are starting to play and move in further. And they're doing that through API integration, aggregation, and providers to connect to the traditional industry. So here you're seeing robo-advisors, which I mentioned earlier, and then some of the payment providers moving in further into other areas because they're getting more information through APIs. Now, who are some of these players? If we kind of look out not too further into the future, but you can probably expand this for at least the next 3 to 7 years. And there's been a number of surveys on this, okay, not only to the industry itself and the leaders, but also consumers, okay. And a very interesting survey came back that in terms of innovation, by next year, the leading players are going to be leading digital e-commerce platforms, okay, Amazon, Alibaba, followed by the giant consumer tech companies in the West, Google and Tencent. Okay, the fintech startups in certain areas will continue to grow and innovate and disrupt. So PayPal, I mentioned earlier. Then you're starting to see the challenger virtual internet banks. So these are branchless bankings that are new neobanks that have come up, okay, and have started to disrupt the industry. Okay, WeBank, MyBank, N26, Monzo, Revolut, okay, completely branchless. Then you're starting to also see, voted number 5 in terms of innovation are players that are moving in from other industries. So Ping An started with insurance, now they're into banking. Orange is a telco in Europe, and now they're branching out in a number of countries around the world, and they have Orange Bank. So, and that's all kind of expanded from the telco channel. And then interestingly enough, consumers in the industry itself feel that the traditional providers will be the least innovative in this space. There are some exceptions, which I put on this chart. So Standard Chartered is a large international traditional bank, but they've launched a virtual only bank, which is under a separate subsidiary called MOX, M-O-X, in Hong Kong. And they did that to not only protect their standard demographic of the older generation that likes to still go into the Standard Chartered branches, but also appeal to a more restless, newer generation that banks virtually and never goes into the branches or very infrequently. And that's where Mox came up. Other variations of that theme as well are going into, a traditional bank launching into adjacent countries. So maybe they don't want to open up a data center in an adjacent country, but they want to open up a virtual only or internet bank with a smaller footprint and maybe less services. So there's where you're starting to see Citi, HSBC, China Merchants Bank are digitally transforming from their old legacy stacks to be able to expand into other geographies potentially with smaller footprints. Now, banks are not doing this, the traditional industry, holistically by themselves. Okay, so you're seeing a bit of co-opetition. So that word you may have heard means cooperate, but also compete. So how does the bank, and you can recognize some of the big names on the bottom here, how are they cooperating with fintechs? Okay, and what are they doing in terms of their business model? Well, you can look at this sequentially in terms of a journey or evolution from internally focused to external. Okay, but it doesn't always follow this roadmap or sequence. And sometimes a bank may need to solve a specific internal problem versus they're more mature and they need to grow and scale. Okay, so it could start out that they want to build out a digital capability around data, so big data or marketing analytics. And then you see some examples of banks that have started their journey, BBVA, UBS in that regard. And then may have moved to a business idea lab. So kind of having an internal incubator or an accelerator around an idea. Okay. And then where can they partner with a fintech and jointly develop new products to go to market? That may then lend itself into a separate digital bank. Okay. I mentioned Mox as an example. Those banks that are really mature in this space in terms of partnership may open up their own venture capital area or private equity area and invest actively in a portfolio of fintechs. Okay. So they see a unique problem in their business or the business overall, and they look for and they cherry pick portfolio companies and fintechs to help solve it and get a return. Okay. Which is kind of cool and unique. And not all of them are doing that, but some of the bigger ones are. And then you see the non-bank partnerships. Now, this is very interesting where instead of competing against each other, and I'm starting to see this a bit with loans and mortgages, in a certain country, in a certain city, the two big anchor banks may be competing viciously for decades over loan rates for mortgages for houses. And they're not getting much margin from each other. And then they're starting to get disrupted by fintechs coming in, okay, with marketplace lending. And so they decide, well, let's join forces together. And on one platform, let's cross-sell our loan products. So it gives the customer a better margin, okay, and better offer than what the disruptor may offer. Okay, so very, very interesting that you're seeing partnerships come up with cross-selling that between banks that were typically competitors to fend off and in some cases still cooperate with some fintechs to do that. China, I spent 4 years in Huawei in China, I mentioned earlier. Now, China is typically, in many of the banks, they're collaborating and partnering with big tech or teletech as another term. So partnering with my own company, Huawei, China Mobile, China Unicom, Ant Financial, okay, or Ping An, okay. Xiaomi is another one. So these are the big e-commerce players and telecom providers that are not necessarily startup fintechs that are looking to disrupt a certain area of financial services. These are the platform giants that are starting to converge technology around AR, AI, blockchain, IoT, and they're offering it on their cloud platforms that they very aggressively have built out, both in private and public cloud capabilities, and offering these to banks as services. So it's a little bit of a different tact and approach, but they're scaling very, very rapidly coming out of China. and moving into other countries by doing this too, especially going into emerging markets. Because from a cloud-based offering, they're offering the banks everything pre-built or a lot of capability under the hood. So looking at priorities from a digital transformation perspective, okay, in the industry and embedded finance, it's really kind of in two areas. So moving horizontally to digitally transform, come out of your own lane or your own vertical silo, and how do you improve and scale horizontally customer acquisition and learn more about your customer experience to continue to grow that way? Well, as I mentioned earlier, the priority is around open platforms and APIs, those three areas fueling transformation, to connect to e-commerce platforms, to connect to healthcare even, or other industry verticals, to see where your customers are spending their money and making payments. And you're doing that through advanced analytics, machine learning, conversational interfaces that are capturing a lot of information, and it's all done through cloud, right? Additional enabling technologies on the bottom, okay, and less of a priority, but what's going on here is a lot of the work's been done kind of more in certain functions, and it hasn't converged as much as the top half of the chart, okay? And a lot of this is focused more on connectivity, data privacy, computation, and processing scale improvements. So you'll eventually see that dotted line move down further, and you'll start to see the top and the bottom half kind of converge a bit more as financial services become more embedded or ubiquitous. But over the next year or two, we're still kind of getting through this as COVID shakes out as well. Now, if you kind of look at the big accelerators, or what are the key technologies, okay, you kind of see really there's 5 of them here, okay. Digital and mobile experience. So if you have a digital transformation program, the question I would ask is, well, what's your mobile strategy? Everybody is still working from mobile devices. Okay. So, you can't only have a digital experience that's internet only based. It's got to be mobile first as well. And obviously cloud first to support that. Big data, AI, and advanced learning has got to be a big part of that. Coming up on the heels of that in terms of data integrity and privacy and security is advanced biometrics and adaptive security, facial recognition. Okay, blockchain coming up for more secure processing as well. Okay, and digital currencies being used more so and integrating into traditional finance. And then open API banking I mentioned earlier. Okay, the middle layer that's essentially connecting consumers, the consumer finance, the real economy to the market economy. Now, if we look at those models that I mentioned earlier, those digital business models, digital commerce, consumer tech, fintech startups, internet-only virtual banks, and then the incumbent banks, okay, this is a mapping based on a lot of research that I've done, okay, what technologies are being adopted and used in each platform. Okay, and you can see a lot of green there around probably the left side, okay, primarily, mostly, okay, across most of the models. And overwhelmingly, it's around data and insights. So artificial intelligence and analytics, okay. And then as you move more towards the right, you see lower adoption, or it's not as mature yet. And this is generally pretty much holding true, okay, for the most part. So you're seeing connection or more connectivity and integration between consumers and where they're transacting to the back end over time, okay. And this was looked at across a number of use cases in each of these platforms and how they were applied and what technologies across the board. Now, if we kind of dissect some of these and look at them in each way, shape, and form, I've done quite a few presentations on 5G when I was in China, in the region, and in fintech overall. And it goes back to my comment that I mentioned earlier. If you have a digital transformation strategy, you've got to have a mobile strategy. Okay. If you don't have a mobile strategy in banking or financial services, then you've got to question your business case or investment case for 5G. 5G is helping to solve scalability and connectivity problems, but also bandwidth and latency. And a lot of those applications for that need, facial recognition, edge computing, machine learning, AI from the device require or are going to need 5G, okay, more so than 2G or 3G. Okay, so there's a definite correlation, across the board between 5G, mobile first, and digital transformation strategy overall. Those pieces all have to kind of be in place. But this chart's kind of showing it's starting to take off. Okay, it's hasn't. You can see that the number of years it took to reach 1 billion users. Okay, 3.5 for 5G, whereas debit cards took 41 years. Okay, so exponentially, we are all using our devices. We're doing more and more from our devices or from the edge. So that's driving the need to have a more enriched and scalable mobile experience, which 5G provides. In terms of use cases in the mobile experience, it depends really the scope. Okay. When we start to get into smart city, there's more convergence of tech needed there that will leverage 5G. So that's kind of what you're seeing in some of the content here, that based on different industry verticals, some are better positioned for 5G for, quote unquote campus use cases versus a smart city wide use case. And that really gets back to ubiquitousness or how embedded that service is or industry. So it's forecasted here by KPMG that the value, is going to only increase for financial services that will become embedded. Okay. Retail's already there. I mean, you don't have to do a lot of research to kind of show that, everybody across a city or cities in a country are using a big e-commerce platform. And it's not only in a certain area. Okay. The same is going to hold true for financial services as it grows as well. Healthcare is kind of middle of the pack. And then some of the other industries that are coming up. Artificial intelligence. I'm almost done here. I'm getting closer to the end here. So you're kind of seeing the wave of application. Okay, internet AI, business specific AI, more embedded AI with facial recognition, and then autonomous AI. Okay, robotic process automation, and then certain the value of the use case applications in certain verticals as well. And many of these applications, fraud detection. Okay. Connected machines in terms of embedded financial services are cutting across industry verticals and getting into healthcare as well. AI in financial services is really around natural language processing, machine learning, fraud protection, computer vision as well, chat bots, mobile banking, deposits, mobile scanning. So these are all services that are starting now. So this is not too far, down the road, 10 or 15 years. This is occurring now in financial services. Interesting chart here. If you kind of look at some of the algorithms and decision making, whether it's rule-based, statistical reasoning, machine learning, or AI, and then what type of individual would kind of use these in terms of software development and engineering. And what cuts across multiple industry business models and platforms, you're starting to see, a breakout from specific functions that are rule-based for decision support versus more complex system architecture and AI across boundaries where it's no longer AI or natural language processing or supervised or unsupervised learning, but it's going the full gamut into machine learning and end-to-end artificial intelligence. Definitely, biometrics and advanced security. So transaction monitoring, advanced biometrics, voice and facial recognition I mentioned earlier, and starting to move into behavioral biometrics in terms of banking leaders who are looking at this. Quantum computing real quickly. Okay, it's still pretty nascent, but starting to take off. You have really three types. Quantum annealers are performing specific functions, and that's really where a lot of the work is right now in terms of the capability. Then moving into analog quantum, it's requiring more qubits in terms of computation. And then you have kind of a simulation between problems that may not be solved by traditional AI algorithms where a quantum algorithm may be needed, but that's going to start to require more qubits before we get into universal quantum computing for all purposes. And that's a bit further down the road, probably 10 to 15 years. That's debatable in some camps, but that's definitely what's happening. So, like I said, short-term quantum emulation, number of examples here. Shor's algorithm for cybersecurity, prime number factorization, quantum simulation, so certain areas, material science and chemistry, and then moving into risk portfolio optimization across financial services. And then you're going to start to see kind of a move between traditional computing and quantum coming down the pipe 3 to 5 years from now. Before 5, 10, 15 years, we start to get into a convergence area of technologies with quantum computing. Some of the use cases I mentioned earlier. You can keep this presentation, the recording is going to be available, but based on those time frames and specific industries where quantum is kind of being realized in terms of three horizons, tied back to those time frames I mentioned earlier. And then the industry, definitely financial services, it's definitely seen as pulling ahead, okay, in this space, okay, overall, in terms of the value, okay. Portfolio optimization, I mentioned, optimizing best investment returns across a number of investment classes, all key use cases here. Some of the players, okay, that are coming out of the gate, okay, in what areas, whether it's hardware, software, quantum as a service, okay, some of them are startups, some of the names you recognize, IBM, Atos, Microsoft, Google, Intel, the ecosystem. And then finally, blockchain. So blockchain, as many of you may know, is not one specific technology, okay, but it's kind of a layered architecture from an application layer into smart contract-based services with tokens or coins. And then you have platforms or consortiums based on protocols. So Ethereum, Hyperledger, R3, Corda, okay, and based on proof of work, proof of stake, and how those coins are mined or the work that's going into producing those, that determines the services that are being produced and the applications that are riding on those. And then the data layer, the cryptography, the blocking, the hashing scheme, and the specific networks. Probably the least amount of work and development thus far has been on that bottom layer, but for true disruption and connection to traditional networks, that's probably where most of the work still needs to happen. Okay, most of the work's been focused on the platform, services, and applications layer, and to some degree, consensus. But there's 75 plus consensus protocols out there right now, so a lot of issues trying to be solved. Okay, this is something that I developed, and it's really architectural drivers or criteria. Okay, and I've seen a lot of companies in blockchain solving or trying to solve performance or scalability. We can process as quickly as Visa can. Okay, but what about all the other criteria that's important? Identity management and privacy from the mobile device through the networks into the cloud and back into the data centers, or integration between public and private blockchains inside the banks to corporate systems that are legacy based to blockchain in the consumer area. And that leads into interoperability, programmability to next generation languages, JSON, Python. And then, most importantly, what's the use case? What are you trying to use blockchain for? that traditional finance and consumer finance systems and applications have not been able to solve. And here's where you see the answer to some of that anyway, where some of the value between 2017 and 30, okay, is going to be unlocked, okay, by industry. And it's growing more and more. So financial services is seeing more and more value come down, but we're not quite there yet. We're still pretty much at early stages, okay, in this space. Interesting chart here. Most of the use cases, okay, especially in financial services, has been, okay, around supply chain finance, okay, trade finance, to a certain degree, provenance or lot lineage, but nearly half of it is still kind of an amalgamation of other random stuff, okay, and in terms of applying blockchain. So this is kind of showing that it really hasn't disrupted enterprise industries, especially financial services, quite yet. This is changing. So, that other pile is getting smaller and smaller, but still we have a ways to go. And once again, this is going to change with, in my view, more convergence of technology, AI, IoT, quantum to a certain extent. A lot of debate in this area. So cryptocurrency, can it be used? Okay, well, it's definitely being used. Okay, and this chart's very useful in terms of showing some of the leading cryptos and how they're being applied and the value and how people are kind of using them. Okay, and then the uptake with traditional banks. So still a work in progress in terms of usage, but it is starting to move beyond payments to become more of a value store. And then finally, two charts, more reference than anything, kind of the art of the possible. So IoT and blockchain integration. Okay, this would be for supply chain tracking and analysis and auditability. Okay, and you're showing a number of verticals here. So food, logistics or supply chain and retail. Okay, as well as regulators, from a mobile device and kind of farm to table, or farm to transport to the store to table. Okay, and how the architecture would kind of work together in terms of IoT and blockchain. And then this is real art of the possible going down the road. Okay, if you kind of look at 3 or 4 stages of everything coming together, where blockchain, AI, and IoT are in the middle. And then contextually, based on the use case and the application, it invokes the architecture or platform, what aspects of those through a controller interface, okay, which would be leveraged, blockchain, AI, or IoT. Okay, and the difference that's driving a lot of this is in the bottom right, the dataverse, okay, in terms of semantics, okay, on what's needed, okay, for the consumer. Okay, and as we move to from minimal human intervention, stage 1, to zero human intervention. So even past autonomous vehicles, that's a view of kind of what's going on one sheet of paper. I don't know if we'll ever get to conscious machines, but that's certainly there. So, and that should be about it. So I went a little bit beyond, but I hope that was insightful and probably provoked more questions and answers for you.
Very interesting, Bill. Thank you. Thank you very much for this presentation. It's very interesting, all the changes that are coming. I have a couple of questions for you. The first one is, we know that all these changes are going to cover or impact the financial industry and companies that have to do with financial services. But how should other industries prepare or get prepared to leverage on these new technologies to continue their operations in the future, like healthcare, for example? Well, you mentioned retail because they do have some financial interaction. But how should other industries take advantage of these changes that are coming?
I would say look at it from the perspective of the consumer or the real economy, okay? Because if you don't, okay, even if you're a B2B company, okay, you still need to look at it from a B2B to C perspective, even if you're not selling any product or service directly to a consumer, okay? Because if you don't see how the consumer from their experience is going to be impacted, you're going to get left behind. There's no question about that. Okay, so COVID has reinforced this. I mean, we've all been in isolation, and the only way that we can access any digital service is through either our laptop or PC. But we're even beyond that now. I mean, you yourself, Manuel, and me. I mean, if you had to analyze where are you spending more of your time, on your smartphone or your laptop, where we're having this presentation, it's probably what, 90% throughout the day on my phone. And I open up my laptop maybe an hour or two every day, maybe a bit more than that, but that's the point. So it's kind of thinking in context of the consumer and what industry you're in and how are they going to consume your services. Okay. And it could be that, the answer is they're not going to consume it mobile, through a mobile device. Okay. There are some examples, but I would always try to approach it from that perspective. Why wouldn't they? Why wouldn't they consume my service or product through a mobile device? What's preventing that? Or why would they just not want to do that, where they would want human interaction only? Okay. And that would start to answer the questions around your business strategy and what technology you need to leverage in coming years, I would think.
Interesting skill. Thank you. And my second question is related to the skills and capabilities that the individual who's going to work in this type of environment should develop from now. In terms of workforce development, how should financial institutions currently should start preparing their workforce to manage all these kind of services? What kind of skills they need to develop?
Yeah, I mean, what's worked well for me when working with technology teams is kind of rotational programs, starting in infrastructure. Okay. Moving engineers, architects, and specialists from storage to compute or to network. Okay. Because they may be very, very skilled in their domain or area of expertise, but cloud has kind of, upended all of that. Okay. And has made storage services and network services and compute services all cloud based. So how did they kind of come together? Okay. So, it goes back to a little bit of enterprise architecture discipline from a technology perspective, but looking at adjacent technologies for individuals in IT teams so that they can get an appreciation without necessarily not losing their expertise in their domain, but looking at it from their colleagues' perspective. Okay. So, how does a storage array look from different hardware platforms and how it's architected, designed, or different cloud deployment technologies, different container technologies, or storage in the cloud. Okay. Storage as a service. So, because, the expectations from the consumer and mobile are fueling those changes. So those skills are going to have to adapt as well.
Right. So it's pretty much like moving from a pure specialist or neither a pure generalist, but more like a practical specialist view, like the T-shaped professional, right?
Yeah. Okay. So if you have a storage individual that lives and breathes storage for decades, okay, they need to start understanding different digital storage deployment patterns and architectures, cloud-based, edge-based, okay, because thinking back to the usage pattern of a consumer and what that does to infrastructure. So
right. Interesting. We have a question from Ruben Melendez. He says, if I am the CEO, COO of a non-financial company, what would be the main opportunities and risks for my company from these trends and evolution of these financial technologies?
Well, once again, I think the answer to that, Ruben, is where are you going to play, or where do you see your vulnerability? Okay, in terms of the expectations. Okay, back to that three-dimensional circle or triangle of expectations from the consumer that wants to make payments, they want to do credit and lending or borrow, and then they want to do financial asset protection, whether it's insurance of goods they purchase or their own financial assets, deposits, or investments. And you've got to kind of, I think, map into your business strategy, your product, service, and applications. Are you touching any of those areas? And then I would say build concentrically around those in terms of your business strategy. Do you want to move more into disruption and innovation in those areas? But if not, if it's not your core bread and butter, damn well better make sure you're protecting those areas because you're exposed. So you may not necessarily be doing payments innovation, okay, in a non-financial corporation or industry, but you want to make sure that consumer is protected. Okay. And then you want to obviously be innovative in that space as much as you can to a certain degree.
Interesting. Thank you very much, Bill. Unfortunately, we're out of time, but thank you very much for the presentation, for all the information provided. This is very useful, very insightful. We appreciate that, Bill. Thank you for being with us today.
Thank you. Thank you again for having me. Very much enjoyed it.
Thank you, everyone, for watching this presentation. The recording is going to be available. Do not forget, please, to subscribe to our channel to get access to these contents and more that are coming as part of ITLIVE. Thank you for being with us today, and see you in the next event that we have.
Thank you.